Hey everyone, this is Ryan B with Practical Forex Trading, and this is your weekly analysis for the Dow Jones Industrial Average, the Dow 30, U.S. Stock Market General Barometer, the economic headline everyone watches. If you want to stay up to date with all of our videos, make sure you click that red subscribe button at the bottom right-hand corner of your screen. So this is a weekly chart for the Dow Jones, and we're looking at a 10-year trend line that goes all the way back here to 2009, right after the last big dip in 2008. And as you can see, really, if you look at the peak of 2008 before that last crash, it was really nothing compared to where we are now, right? So that really made our old high, which then became lows in the future, support and resistance. That's the fundamentals of support and resistance. So this trend came up through here, set new highs, came back down, touched the old highs as support, then moved forward over the years. Now fast forward to 2020, we see the giant sell-off that occurred a few months ago and this big old bounce. So now I've got sentiment mixed, and I'll tell you why. Mixed means there's both bullish and bearish signals. Okay, so here's what we see. This is definitely a 10-year uptrend, so that's very bullish. We see the weekly moving average is sitting on top of, the fast weekly moving average, the 20, right? Price is sitting on top of that. So that's also bullish. We see prices moving above this trend channel, stuck in a bullish ascending wedge. It's a tight one. So if we go ahead and map that out, let's add that. So that happens, price gets stuck in a wedge, and then it ricochets off both sides before continuing upwards. So let's make that a different color. Oops. Why is it not making a different color? Anyways, price is stuck in this bullish wedge. So now as long as price stays on top of the index, if you will, it's not really price, right? It's an indices of 30 stocks. As long as this average, though, stays above the fast-moving average, that's another bullish signal. So here comes the bears, though. The bears being this old resistance at 27,000 held pretty significantly recently. So we had the approach, the big bullish candle that tried to pop through. The next week we had the big sell-off. Last week, so we can see the market's undecided. This is essentially like a spinning top doji, meaning that there was almost equal buying and selling. So market was really kind of not sure where to go. Because in order to be bullish, price really needs to close back above this 27,000. Then we can say the bull market's back on. But until then, there's a chance for price to move away. So let's go ahead and talk about the possible scenarios if more selling occurs. So we can see this parallel trend channel here, I have it marked, and it's a certain width, but I can go ahead and change that. Let's do a different scenario. Let's put a trend channel here. I can just go here and draw it from most recent because the angle still works. And I can say, well, price could actually come all the way back down here. Because we can see historically this trend line channels, right? Obviously, price honors it pretty well. It skims right along the top or underneath that. So think of these trend channels as a support and resistance over time. That's why it becomes at an angle. So we can see that price could be more selling all the way back down to the 24,000 mark. And if we go ahead and put a line there, we see we've got some good support. And really, that's fine. So think of it this way. Even if the Dow Jones drops another 1,600 points, we're really just still sitting above this median line, right? So then I would think here comes the moving average. This is going to swoop across here, across the middle. If price comes back down and sits on top of it, what we see is that as long as price is sitting on top of the moving average, in the future there's usually good potential for growth. So here we can see back in 2016, price is right on top and kind of folded over, but really the dips were short term before returning upwards. So this is our scenario where price could go all the way back down to 24,000, but still, then we just know that good buying times are ahead. What we're looking for is a break of 27,000. Then we can say the bull market's back, and then we're shooting for new highs to hit that 30,000 mark. All right, everyone, have a great week trading. I will talk soon.